What's happening, traders? We're going to talk about price action rules to follow to get the high probability setups. It is December 1st, 2021, and volatility still remains fairly high. We're getting a lot of bars. The bars are fairly big, so that means that your stop loss is going to be quite substantial. So remember, utilize your limit orders, scale down if you have to, go on micro, or even stay on a simulator if you need to practice it and you don't want to risk your capital, because it can get quite overwhelming trading this fast and volatile market. Now, I recorded my trades, which I'm going to insert once we get to them, but let's talk about the setups because we have no time to waste. We got plenty of setups to talk about. So the structure for the day started looking very strong, like a bullish uptrend. You guys can see clearly we are making higher highs, higher lows. EMA, this 21 bar EMA is pointing higher, good indication that this is a bullish uptrend. This trend line is fitting nicely, and we have a first high probability setup. Why this is a high probability setup? Because this is a two-legged pullback at the key entry point at the EMA. Plus, there's the downtrend, which played out with the break and a new extreme, indicating that the sellers are no longer in control and we can resume looking for buying opportunities. There was a higher low situation that gave you an additional entry. This is a confirmation setup of this second entry long. So these are two great setups back to back early. Market hasn't opened yet because market opened somewhere around here. So this is still pre-market US regular hours session. So the market opened right here, so I'm not trading this early, but this was the first high probability setup, and there was a similar situation right here. Two-legged pullback, break and a new low, sellers are no longer in control, and we have a second entry long at the key entry point. But can you see the difference? Right here, we closed above EMA, we closed below, and the second entry long triggered above horrible bar. This is a full-on bearish bar. We are in an uptrend, and we want to buy above bullish bar, so I cannot go long above bearish bar. There was this third entry long that triggered, once again, horrible bearish reversal bar, and you're starting to close below EMA. Once this third bar was forming and it looked like it's going to be full bullish bar off the key entry point, I was preparing to go long above this bar right here, but it closed once again below EMA. Half of the bearish body is a stem. So once again, 1, 2, 3, 4 bars closed below EMA, 5 bars closed below EMA, 6 bars closed below EMA. This is an overlap. This is good enough indication. Take a look how price is reacting. It cannot let for price to close above. You cannot go long here, even though it is tempting. And we have a break, attempt to create a new extreme. An attempt is a lot of times close enough. Price created a double top right here and reverse push back below EMA. If you draw the trend line like this, and you can see there's a wedge pattern forming. There's a strong key level and a trend line, and price is starting to lose steam, and it's getting very choppy and very messy because there's very little movement, and these wedges are dangerous. Stay away from trading wedges like this. It will break out to the one side, and then you will trade as the price action will break. This is where the market opens, so I'm not a big fan of taking this first entry long, second entry long, plus EMA is completely sideways. We are working in this trading range, so you have to follow the trading range rules, and you cannot go short directly into these lows. Market broke lower, and once the price breaks about below the congestion, below the trading range, most breakouts of trading ranges will fail. But remember, you want to take the failed breakout reasonably close to this trading range. You cannot go long all the way down here. It would have worked here because this would be the first bullish bar that we closed above. We didn't trigger above this or this bullish bar. This was the first bullish bar we triggered above, but you already moved way too far down, and by the time you got the trend line working lower, this was the trend line that I found. I used these 3 swings, and now we're getting to the setup that I took as my first trade, and it was a losing trade because we have a new low form right here. We have a first entry short, second entry short, but you're too far away from 2 key entry points, so you cannot take this. Even though you're taking a second entry two-legged pullback with the direction of a trend, you're far away from key entry points. By the time you get third entry, you have the short and bullish trend line working. So you take a look at these 2 instances. The downtrend's played out. Here, the uptrend is still working higher, and you don't have this trend line yet. All right. So when I took this setup, I treated it as a double confirmation of the EMA, a lower high setup of this entry right here. I went short here, got stopped out, and it instantly reversed on me. Unfortunately, I should have been respecting the uptrend. This is what can happen if you don't respect the short and uptrend. You can see how nice price is fitting inside of this, and it cannot close just a little bit here. All right, and I'm going to go for 8 ticks. I'm going to go move my runner somewhere around here, and what I'm looking. I may have gotten trapped here actually. Oh boy. and I got stopped out here. Below there's a break, move to a new extreme, and this is a good enough indication that there is something wrong here, because the trend line didn't react, EMA didn't react, we just pushed above, strong move above the EMA, and we had a new high, first entry long, pullback, a second entry long, short, failure. This would have been a tempting entry if the signal bar looked a little bit better, but the bearish bar is too big, and half of the bearish bar has a bullish stem or a bullish body. So unfortunately, there's no entry right here, but I like, if there the signal bar would be a little bit better, this would have been a great entry. And price pushed lower, and it pushed back above the EMA, and you can see how we are struggling, because we have a first break, and if you're expecting a new extreme, which you are, you're supposed to be pushing lower, and you push back above the exponential moving average. So something is already wrong, because we keep spending our time too much above the EMA. So there's a first entry short failure. This is the higher low. I still think it's a little bit too early to sell just yet, but once you get the first entry short, second entry short failure, you close above EMA one more time, which confirms the bullish bias that we are struggling to, make a new extreme. And this is a nice trap, and market reversed higher, and from this point on it was obvious that this is going to be a bullish trend, and you have to stop shorting, and you have to start looking for sells. All right, so it ended up fitting nicely off to lows like this, and you put it at the top, and this is now the bigger pattern right here. Take a look at this strong bullish momentum. So I draw the trend line, and everything is right now bullish, so I'm sticking with the trend. And take a look, similar pattern right here happen right here. Break, new low, two-legged pullback, two-legged pullback, two-legged pullback. You have a downtrend working lower, break, attempt to create a new extreme, but it cannot create a new extreme because this important key level, this breakout area, is holding price, and this is a breakout pullback pattern. All right, you don't want to go long on this first entry. You want to wait for the higher probability for the second entry long, and market push strongly higher. All right, guys, so I'm resuming the video as there's a second entry long quickly forming at the key level right now. Let me see if we can get a break. All right, so you guys can see I have automated strategy. I'm going to go for 8 ticks. I'm going to move my runner somewhere around here. It doesn't matter. My stop loss has to go below this lower high, and what I'm looking at the new high right here, first entry long, pullback, second entry long right here, and we are very close to getting filled. We need two more ticks. We're bouncing off but we have to take through, and we got out. So I'm going to quickly tighten my stop loss. This is now working in a bullish bias, bullish channel. All right, there's a new high, first entry long, so you're skipping this. New high, first entry long, so you're skipping this. There's the new high, the first entry long, little pullback, kind of like a second entry long. You can treat it like that. And this was my third trade for the day, because what I liked about this trade, I liked how a lot of bulls got trapped here, because it looked like this is going to be a failed second entry short, because you have a first entry short failure, a second entry short, and it looked like it's going to be a failure that people are going to go long and it's going to rally up from here. But you cannot go long above horrible doji bar that closed below EMA. All right, so once it took one tick higher and instantly reverse, and it was a very quick momentum bar. This is a trap. There got everybody trapped who went long thinking they trapped all the shorts, and instantly reversed, and it was a quick, easy scalp. All right. Wow, the stop loss is fairly big, as I'm going to take a first entry short, a second entry short entry. But what more importantly is a lot of bulls got trapped here, right above this bar right here. And we're bouncing off my exit, and we got filled. First two swings set up the trend line. And why am I looking for this downtrend? Because we are still working above this key level, and we have a break and a new extreme of this short-term uptrend. So I'm expecting now that a little bit of the correction back down to this potential trend line. All right, however, this is unfortunate on the first entry short, new low, first entry short, and a massive overshoot. When you see overshoot like this, and this is especially a 90-degree sharp, strong angle, these 90-degree moves will get reversed quickly, or they will get at least pulled back quickly. All right, market cannot be so steep. You take a look how far away you're from EMA. EMA acts as a magnet. This is an overshoot of this trend line, which a lot of time leads to break of a trend line or straight up reversal. In this instance, since we overshot the downtrend and we are at the key level, the strong bullish momentum confirm. Okay, so here's, you are at the key entry point. You have an overshoot with the direction of a trend. So this is how the overshoot can react, and this is why there is no break and a new extreme. Right, because the bigger pattern takes precedence. So price traders will not look for new extreme because they're looking at the bigger pattern. All right, so they have overshoot and they're looking at the bigger pattern, and price get pushing higher, and there are just a bunch of first entries. So once you keep pushing higher like this, you're only looking for second entry longs, and you get just a bunch of first entries. You have micro triple top, and you have a first entry long, and it worked. You have a little bit of second entry long, but already way too close to these highs. And market just kept pushing higher and kept pushing higher, and you had to watch it go without you. You cannot let this go inside your head that you basically see this entire move and you cannot jump on board. It will shake a lot of traders and it will mess with them because they will see this entire move to go without them. But that's the part of trading. You cannot get discouraged by this. This is going to happen. And because watching this live is really much harder than after the fact like this. So you have to let this go without you. You have to set rules that you follow. You cannot start taking first entries because next time you will get chopped to pieces. All right. At this point on, we came very close to the upper trend line. And when you're coming from the upper trend line, you're most likely heading to all the way down to here. And you have a break and a new extreme of the trend line form. All right. So at this point on, the market was extremely overbought, because this was so steep and just full of first entries. You know, this was really overbought big time. So we really shouldn't be looking for longs at this point on. We're coming from the other side of a trend line. We're most likely heading to all the way down to here, and we have a new high, first entry long, pullback, below EMA, second entry long, failure. We have a shortened downtrend. We have a break, so we expect for price to create a new extreme. However, this bar closed above the EMA. This is why I didn't take this entry. I really wanted for this bar to close below. This would be a nice failed second entry long because we're now pushed below EMA. We're coming off the top. There was this now, new low, first entry short, second entry short, new low, first entry short, second entry short. Now with the direction of a downtrend, you're still looking for the new extreme, but it had 3 ticks of a bullish body. I was really preparing myself to take a short here, but unfortunately, it closed a little bit too bullish than I would like. It ended up working and the market kept pushing lower, new low, only a first entry. And you actually have a little bit lower high here of 2 key entry points. But by that time, 1, 2, 3, 4, 5, 6, 7, 8 bars are going sideways. It can be, you know, this can be, if you know what you're doing, this can be quite a good entry. You know what? I will mark it because if you're a little bit advanced trader, you are having a gut feeling here that this may work. But once the bars are stacked up like this, I can't recommend this trade. And then we have a repeat pattern of here. We have an overshoot. We have a strong 90-degree move down. Overshoot a lot of time lead to reversal. Overshoot a lot of time lead to break of a trend line or straight up reversal. So every time you see overshoot like this, you have to be careful. Plus, you're bouncing at the very low. You can make a case for making a trend line slightly bigger like this, which I guess it's not wrong because you have a break and you keep moving higher, you keep moving higher. So I don't think it's wrong making it like this, but it ended up being a little bit like this because the first break was the valid one. You created a new extreme. And look at the big downtrend pushing lower. And once you see, you know, the move from the upper trend line this strong to the downside, I don't want to go short here. There's a new low, a first entry short, pullback, second entry short. You have a break and a new extreme, which means that the uptrend played out. And there's the failed second entry short. But remember, you're going long at the very high of the move, you know, and there is no room to any previous swing because the swing is already down here, or basically this is forming the swing. So you're going long at the very high of the move, and already when you're watching, you have a first leg, pullback, second leg. So you have a 2-legged move up already, and you have this trend line. So I'm not, you know, really a fan of going long here at all. And then you have a bounce off this support. At this point on, this is quite confusing area because you're having 2 conflicting beliefs. Is the downtrend strong or is the uptrend holding? And every time you feel this confluence, you basically just want to be patient if you're unsure. And this is what I did. I didn't take any trade here, but I then, you know, I marked this setup because this was really tempting. This is like the final piece of the puzzle because this is now a high low. We're pushing above the EMA. The trend line keeps holding here, and you know, this confirmed it. And this is now higher low. It trapped all the shorts going short on a double top right here. This is quick, easy trap right here. So this is quite a decent entry. But you guys can see how we are losing momentum. Normally you go from this trend line all the way up to here, so you would expect the same. You're from all the way down to here to get all the way up, but you cannot even make it to the middle. Take a look at this pathetic move that the price created compared to this big move. You know, this is telling you something, that this was really very lackluster move up compared to these overall big moves. And once you push back strongly below EMA, you have to stop looking for longs. You know, when I was watching this was really tempting long, but I drew my short-term trend line and I cannot break the rules. So there's the short-term trend line, there is the break, there's the new extreme. Even if you have the trend line like this, you don't want to go long now, because the bearish move is too strong, and you know, we are really struggling to push higher. We cannot even make it to the midline. Take a look, this is the midline, and you even cannot make it to the midline. You're making lower highs each time, and it's starting to look like the market is losing steam. So this is right now starting to be a fairly substantial downtrend. You're pushing below EMA, you have a new low, first entry short, second entry short. This is a high probability setup, and you have this higher low, lower high confirmation of this second entry. EMA keeps holding prices the entire time, and market never looked back. You get a failed second entry long, but you're far away from two key entry points, and you already move way too down. I'm not a big fan of this. And once you keep pushing lower like this, you can start looking for the bigger downtrends. And this actually looks perfectly like a pitchfork, which I don't believe in these pitchforks, but in this particular instance, take a look how perfectly it looks like that. Just a coincidence. Oh wow, we're pushing lower big time here. So right now you guys can see we're strongly pushing lower. If you take a little step back, we started from the all the way out to here, so this is strong downtrend. So you're just looking for second entry shorts at the key entry point, and you have a new low, first entry short, you have a break of a trend line, attempt to create new extreme, second entry short. Price cannot create a new extreme because there are two key entry points, and this is a second entry short, nice bearish bar of two key entry points. This is a high probability setup. Market push lower, you get a first entry, you get a second entry short right here, far away from both key entry points. This is just a bunch of first entry, but this is the break and the new extreme of this downtrend, and you have no idea that there's going to be this big uptrend here. This big uptrend, your only thing you're focusing is this trend. So you have a break, new extreme, so you have to draw the short-term uptrend. You have a break and a new extreme as well. All right, so when you're looking at this like this uptrend played out with the break and new extreme, and take a look at this big massive downtrend. And once you keep pushing below EMA like this should tell you that there is some bigger pattern in play. So I like having my trend line like this because it fits quite nice off the lows right here, and really looks like a pitchfork pattern. I wasn't trading at this at this time. I was taking a break, but when I'm looking back, I have a new high, first entry long, little pullback, second entry long, failure. And I guarantee you, some of you watching, I bet somebody took a short right here, because had I been watching this live, I probably would have taken this trade right here as well. Let me see. Yeah, we close back below EMA, strong push up higher, it is a little reverse down. The trend line seems to be in play. You know, this is a high probability setup that just would have failed, but there is not much that would stop you from taking this. It is 1 2 3 4 5. So we got 5 bars, we got 6 bars now going sideways. But trading is about taking a chance, and I would really, had I been trading, I would probably pull the trigger right here, because the chance is so much higher that you're going to push lower. And take a look what happened. It just stopped you out, and it took exactly where you thought it was going to go. And take a look what happened. So you're playing the odds correctly if you're trying to go short at these highs right here. And there was a new low, first entry short, second entry short, and the EMA and the trend line, excuse me, held. So this is the second entry short at the key entry point. Massive move down, and remember, you have to keep drawing the short-term uptrends. So this is the short-term uptrend with the break and a new extreme, but you don't want to keep selling just yet, because you never know how many pushes higher you're going to make. So you want to wait for a nice push below EMA and nice confirmation setup. So you have a push below EMA and you have a lower high setup. This is how we use the lower high. When we have a break and we wait for price to create a new extreme, we don't want to keep selling at the tops. We want to wait for price to push below EMA, confirm the downtrend momentum, and you have a nice lower high entry. This was my last trade. for the day. I didn't even record it. I managed to record only at the very end. Alright guys, I'm quickly resuming the video as I just right now took this lower high setup and I didn't manage to record it while I was in, but this was going to be my last trade for the day. I took a break while price broke the trend line right here and wasn't sitting here throughout this area right here, but as you guys can see, there's an uptrend, new extreme form break 2 legs to new extreme, which indicates that the uptrend played out and price pushed strongly below EMA. Overall bias is down, and there was a lower high set up right below EMA. This is the healthy lower high, and there's a first entry long, second entry long. Signal bars are not great. I'm just going to mark it. Had the signal bar been better, just for you guys to know, but this is the new high, first entry long, second entry long, failure. You close below EMA. This is the same thing that happened right here, first entry long, second entry long, failure right here. All right, so market push lower, and once you have a break and a new extreme and you're finding yourself at this important low of the day at this key level, I wasn't thinking that we're going to push lower like that. I was expecting some sort of move higher, which we did. We had a massive move up, but eventually market started selling off to the downside, and I don't see any decent setup because you're potentially looking for price to create a new extreme, so get a new high, first entry long, second entry long, but it triggered above horrible bearish bar, which you don't want to go long above. It didn't trigger above the bullish bar. Then you have a third entry long that closed below EMA, and then you're struggling to close above, and you keep pushing lower, and you keep pushing lower, so you have to abandon the longs because price keeps just failing to close above the EMA. But there is no like good second entry short. You keep the lows keep resetting, a bunch of first entries, new low, first entry. You see, you have a first entry short, second entry short that closed above the EMA, and now it's already way too late. So a lot of volatility still. I'm looking at the 2500 tick chart just to see if there's going to be a little bit less fake outs. So far it looks decent, but the 2000 tick chart is still a great chart, but just with the increased volatility, I'm feeling like there can be a few more fake outs here and there, which I don't like that much, but we keep having still the volatility, and hopefully the video was helpful. So take care, buddy.